You've got up here, you had a lot of buyers coming in. Now we've been telling you all week, actually since last Wednesday. So for a whole week, we've been telling you, this is now that we want to take shorts from. It's a big area of resistance. When you come up here and you zoom in on the order flow, you can really spot that all the increases in open interest, which is where positions entering, are on heavy market buying. So here, granted, it's not too much, I will mention that, but that's the way things have been in the past few months in the market. 600K there, you've got a few million there, another million here. You've got some shorts here, and then some more buying taking place. But overall, I think I counted it in the live trading session. It was about $4 million worth of longs that have entered in this region aggressively, in a region where you shouldn't be entering long. So, with all that said, that's kind of why you're getting the trickle down. We also went over the SFP, how one could have identified that this wasn't going to be the breakout to take you through the daily level that we've got just a touch higher. Let me pull over one of my trading view charts actually. Voila. We actually didn't tap the daily. Magic, I just want to mention to you, if you're listening, I also didn't get my final TP. Guess which level we forgot? If I scroll down somewhere and I find my levels, we completely forgot the weekly open. The weekly open is where it effectively bounced from, which is absolutely gutted because I had my final TP at the gold pocket, and it was the week open. I had all my daily levels hidden, and it was from there. So good on that one. But anyway, besides the point, I'm going to hide that again and get rid of that golden pocket. It came to me when you were talking. We went over it in the live trading session. But yeah, the SFP that you've had, the move up into it was a weak move. You can see you've not got any real buyers coming in this move. Now, if you look at the delta on the other attempts, this one here, you had very high delta, positive delta going into the move. So, granted, the open interest wasn't there, so the move wasn't sustained. But even on this attempt, you've got significant delta coming into the charts. Whereas when we had the SFP of the highs, even in the build-up, you knew if you were using order flow, this wasn't going to be the one. And the fact that it gave you then the setup of the SFP was just like the cherry on the cake. You can see in the build-up, you've got decreasing open interest on this candle here with negative delta. And in the next candle, just the one just before, you've got only 25K positive delta. That is minimal. It might as well be nothing. So you've had a complete battle here for market superiority between the aggressive buyers and the aggressive shorters. Normally, you see heavy buying going into the region. We had nothing going on here. There was no reason for this to break out. And then it was a very fast move. I had the alert when I was at the gym, but then by the time I looked at my phone, it was down here again. But you could see, I was speaking to someone, the other group, about positions changing hands. I wouldn't really say this is it because of the wicks, but you definitely would have had some take place here when you came up and took the highs. You can tell by the fact that we had open interest go up, which would have been probably market buyers coming in, and then a sharp decrease as shorts stopped out. You can see 759K there, 870K there as you took the high. So this is a lot of market buying with open interest not really following suit. So what that means is, these traders that were taking short on the other side of these market buys, because obviously when open interest increases, for open interest to increase, you need a market buy and a market short. You need two contracts. If it's a market buyer, there is also a short on the other end of that, and that creates the increase in open interest as that extra contract comes into the market. However, when you have it stagnating, like it is here where it's flat, it shows you that one contract, one person's left, yet instead of it decreasing, someone else has taken that contract over, which is what you had here with the shorts taken out. And then once they've built that position, we were going over this just a minute ago, so it's quite fresh to talk about. So once they've taken over that position, you then want to see them show their hand, show their bigger, whoever it is that's taking that trade, normally a much bigger position, someone with a big bag, You need them to then show their hand, in which you've got selling imbalances taking place, and then the next candle below it, next to it, you then have still shorts entering the market. You have increasing open interest on more negative data. It's more aggressive shorts, and then what they do is they push price to a position where, granted, it wasn't too much here, but they were more to the lows of the range somewhat, and then they push the price to an area where retail then, I've got something about those, retail then continue the move. So they've done their part, they've pushed it to a point where they feel comfortable, that then retail then continue the move downwards, which is why we've had this slow drag down. Then as soon as New York markets opened, every time what we were getting is you keep coming down, and then you'd find a little bit of buys, you'd find a little bit more support, but then ultimately the support would fail and you come down a little bit more. Then you've had the New York session really open at 6:30, and you had a ton of, just look at the volume difference. It was really nice to see during the session, and we were looking at some potential trade setups that one could possibly take. And you could see here you were having a load of buying taking place, and which is good to take you to what would have been a very close golden pocket. So if we pull it from the SFP to where we were, it was about here. You had a lot of buying taking place, but you don't have a setup there, and there's a lot of resistance and supports in this region. You've got a weekly level, and the VWAP is there. So with that buying taking place, it can be a good signal to, okay, if we get to that area that we want to take the short, which would have been the golden pocket, if we get to that and then reject and really start to reject, I'm not saying like you're going to miss the move by a load, but if you start to then put these buys that are coming in underwater, it gives you then well-needed fuel to the downside. But instead, it did a mini SFP of this little high here, which is always a shame. I don't know if there's a day point of control at the time, but that's where it rejected from. But have we really taken out all of these traders here? I'm not sure. I think we've still got more in the tank to go down. Do I see a short right now? You could possibly stop loss above this high, but it's a riskier. It's not a very good trade. But I just don't think we've got the legs yet to really push it to the upside, and yet we've got the liquidity here trapped in this region on the chart to probably take it down to the area that we were mentioning. I think Magic mentioned it, this golden pocket. Closes out the hourly PVA. We've got statistics on their close. It looks primed, to be fair. But yeah, you'd have to be cautious getting into a short right now. Whether we come up, take this high again and get into that golden pocket possibility. But it's besides the point at this point. We have to wait and see for what occurs. On Magic's topic of what happens when the TPO point of control shifts and the volume point of control does not. Now, I'm not going to go back and merge all these. It takes awfully long on Exo charts. It's a real pain in the arse. He can just pull a thing on ATS and get it all. But what it means effectively is, I'm going to use this one as an example, which is actually wrong. So theory states if I lower the tick here to 20, I might get a difference. Okay, so what we're looking at here is normally theory states, and it largely does play the role. So when I say this and it's the wrong way round, understand that normally you would expect a TPO market profile like this to then continue down. When you have the time in a specific area, so in this instance, the time point of control is above the volume point of control. Now, if you're using just TPO, theory states that if the volume is below it, you would continue down as there is more buying and transactional action down here than there was where you spent more time. So with the TPO point of control moving up and the volume staying down here, it's not a good look. You want it to you either want them to be synchronized or you want to spend a lot of time at the lows. And do you know what, Magic? I actually think it's not a bad thing if you're getting buying at the lows and the time is just you're spending time there. It's not a good idea. But yeah, theory states it'd take more pondering on, and I'd have to merge all these charts and go through it. So I'll do that for tomorrow. But theory states if the time point of control is above the volume point of control, normally you're going to head down. But I will merge all of these and have a look at the thing tomorrow, because then I can zoom back into it and try and pick it apart a bit more. But yeah, that's what the theory states.